let's get a broader take on not just the tech sector, but markets overall with Alex Guiliano. He is in studio with us. Alex is Chief Investment Officer at Resonate Wealth Partners, and he joins us here. Welcome.
Great to be here.
Thanks for joining us today. So talk a little bit about technology, because we've seen this split of tech into hardware versus software, and hardware being chip makers in particular, but also any kind of storage drive maker versus something like software, which has definitely gotten slammed by AI concerns. Is that split over for now, or are we starting to see that split hardened into something more permanent?
It's a great question. I think investors are grappling with that today. Some of the trade action we've seen today may be a bit of profit taking after the big run up that we've had. And I think investors are trying to figure out, are they staying optimistic? And if they're staying optimistic, do they want to do it in more a defensive and opportunistic way? Or do they want to continue to let the winners continue to win? And I think in this current environment, especially with the big pullback we've seen in software earlier this year, investors have an opportunity to evaluate, is that pessimism in that sector really going to come to play out? Or are there opportunities there at a better valuation point to enter these names? And is AI going to be a complete disruptor, or potentially an opportunity for these names to be the distributors of AI over time? And after the big run up, particularly in the semis especially, you've had investors determining, are these supercharged earnings on a cyclical trade and is now being pulled back? Or is this something that is just a bit of profit taking and the run will continue? And investors are grappling with that this morning.
So what are you telling your clients these days as they think about stocks, bonds, alternatives? Let's just start at that 30,000 foot level. What's the conversation you're having as in like asset allocation type things?
Yeah, I think at the end of the day, you can be both defensive and opportunistic. And investors have seen their Mag 7 names, especially over several years, almost turn into portfolio utilities for them, where they may have huge gains inside of them and be reluctant to sell them. But also these names have tremendous earnings power that can ride through different cycles. Investors have the opportunity to have some beaten down sectors, like I mentioned before, on the software names.
Yep. But
you also have opportunities in the bond market, right, where we had the Fed meeting last week, and you have an opportunity where even the 2-year Treasury today is trading at about 4.2%. And investors can say to themselves, okay, well, that's a much greater yield than I was getting even a month ago. There may be an opportunity there where that rate hike that people are expecting doesn't play out. And if it does, they can lock in at about 4.2% for 2 years and be comfortable. Or if we do get any kind of big pullback, recession, or rate decline at some point, well, that they can sell it early for a potential gain and live with 4.2% for 2 years. And so there's opportunities to be both opportunistic, even if you're defensive right now.
How are you thinking about crypto, and how are people asking you about it and where it fits into your portfolio, especially with Bitcoin and the ride that it's been on, right? I mean, it was at a record high in October, and then, of course, it crashed and it got below 60,000 just about. And right now we're sitting at about 62,000, and it very much is trading like a risk asset, in line with tech stocks.
Right. Yeah, I think most people who are investing in crypto have found themselves either in a camp of like big believers and want to be long-term owners, or potentially want to make a speculative trade on it in a non-correlated way, finding themselves in a portfolio that may be overly concentrated than they even wanted to be even a year, 2, 3, or 5 years ago. And so from a crypto perspective, I always tell investors, from an underlying asset perspective, you want to make sure you're owning it for the long term, and it's a very speculative asset, and you're going to try to trade in and out of it and know what your potential loss point might be. But if you're going to own an uncorrelated basket of assets, just make sure it's something that you can own for a very long time and be comfortable with the volatility that you're going to face.
I'm always surprised when I talk to money managers, RIAs, and we talk to them about alternative investments. I used to always think 5% to alternatives, but it's a higher number than that. How do you, when you sit down with a client, what do you think is a reasonable allocation to alternative investments?
Yeah, from the different level of sophistication of an investor definitely comes into play. I would say the big thing, from a retail investor perspective now is a lot of the alternative investments typically had a much higher cost structure or much more illiquid than they used to be. And those barriers have come down over time. I would say investors are looking for diversification absent like the stock market, where you've had significant concentration over the last few years, and are looking for the similar type of returns, but in a less correlated way. And that gives investors the opportunity to get invested in those spaces. I would typically have a client aim to have like 20% or less in that particular area, depending on their mix. And that just simply allows them to diversify in a way that illiquidity concerns don't necessarily have to be there, and they can ride the wave of long-term returns.
Alex, we started with big tech, so I kind of want to circle back to big tech here. SpaceX is now a publicly traded company. There was a lot of excitement about the IPO. We're all waiting for Anthropic and OpenAI to list as well. How are your clients thinking about the kind of exposure they want to get to these gigantic unicorn names?
Yeah, entry point is a major factor for a lot of clients in terms of like, do they have opportunity to access a pre-IPO, or now that it's now publicly traded, is that something they want to jump into or let it settle out, right? I would say typically in this type of environment, I would encourage my investors to let things play out and settle out and start really getting through a lockup period and really having a trading on the indexes and really find its level. And I don't think it's really found that point quite yet. I think the big thing investors want to focus on is, again, why am I owning this and what would cause me to sell it? And at some point, because investors making the purchase decision tends to be easier than the sale decision. And so if they're not willing to ride out that volatility, knowing what their floor might be, but if they were able to ride out the volatility, own it for the long term and be at peace with that.
All right, good stuff. Alex, thank you so much for joining us today. Alex Guiliano is Chief Investment Officer at Resonate Wealth Partners. Really appreciate your coming in today.